Hey, what's up, folks? It's Jesse with Keeping It Real Finance, the channel that always has your back and tells it like it is. Well, today's video is answering the question of, are we going to have a June rally in the cryptocurrency market? So can Bitcoin have a rebound that pulls the rest of the market with it? That's what we're going to be looking at in today's video. So what I'm going to be focusing on is we're going to look at the chart, the various indicators and what they all kind of mean and when they add up. We're going to be taking a look at coin market cap in terms of Bitcoin's market dominance, the HODLer wallets. We'll be taking a little bit of a look at Twitter in terms of what's going on in the overall space, what some of these centralized exchanges are doing. And then we're going to basically give you an assessment of everything in the final thoughts here of this video. So stick around for that. That's where I'll sum everything up with sort of my prediction on what I think is going to happen here. All right? So if you enjoyed today's video, make sure to hit the like button. If this is your first time to the channel, make sure to subscribe. And if you click the bell, you'll be made aware whenever I post time-sensitive content just like this. And now, let's get it going. All right, so I wanted to kick off today's video by going straight to the Bitcoin chart and letting you know what I'm seeing in this current chart. So I've drawn a few of the trend lines for us. I've also got the Fibonacci turned on. We can see the EMAs that are moving here. This is the red line, the green line, and the blue line. And then down below, we have volume. So you can see that we were riding this trend line here upwards right up until the Luna UST collapse, which is kind of what tanked everything down to where it bottomed out down here. That's about, what's that, 25,287 or so. From that point, we have had a rebound in this trend line, and you can see that that's where we're currently at right now. We've also got this resistance level that's right about here, which essentially is almost, let's say, 30,700 or so. So that's kind of where we're at right now. We're floating within this quadrant is what I would call it right here between these trend lines, all right? So now, for some observations here. So if we are to have this June rally that a lot of people are calling for, what we would need to do is we would need to, first of all, press on through this resistance line right here. We would also need to break through into this next quadrant, okay? Now, if we can bust up into here, then yes, absolutely, we can have a good month for June if Bitcoin is able to get up into here, either within this area right here or within this area right here. So if we're in either one of these, you know, your price from the bottom, let's say 31,000, really it could go probably as high as 36.7 or so if it has a good run up in here. So that's more than possible. Now, if it even breaks through this next trend line, well, then we're looking even higher, 38,000 to kind of get back to where it was before UST and Luna fell apart, right? So that's where that's at right now. Now, looking at the EMAs, so this is our 200-day, the blue one, that's firmly on top, the 50-day in the middle, the 20-day on the bottom. So they're firmly bearish right now. So we're going to need the 20-day to cross through the 50-day to then, you know, move them both above the 200-day moving average. So in terms of will this happen within the month of June, I highly doubt it. If you look at where this 200-day moving average is, it's way up here. To happen in June would be kind of a tall order, okay? Now, I also want to show you here, so here's the volume at the bottom. And I think this is a very telling indicator. It's been a telling indicator for quite some time. And so if you kind of go back in time here, and you look at the volume, you can see here at the bottom that there was some massive volume throughout the past that led to this huge run up here right before 2021, sort of the tail end of 2020, right? Since that time, the volume has just sort of been trending downwards with the exception of a couple big red spikes. We had a few really good buys right here in July of 21. But other than that, it's been kind of red. Even this latest run up, you know, this green buying volume, look at it down here in terms of volume. It's next to nothing. So if we kind of just hover over this, you can really see that we haven't had the volume. And in order to make a significant run, we need volume. So I think volume is going to be one of the top indicators that you're going to want to look for to know, is the cryptocurrency market, is Bitcoin going to have a rebound this cycle? Volume will tell us. Okay. Now, let me kind of go back to how I had this laid out here, and we will zoom out to the rest of the indicators. So, looking here at the rest of the indicators, we've got the stock RSI going. Currently, it's telling us that we are in a bit of an overbought territory. So, could this dip a little here and then stay within this trend line? Yeah, it still could, and we could still go up from there. What's really interesting is down here in the market cipher, you can see here that we actually went above baseline for just a little bit here with that latest run up. Now we've got a red dot, and we kind of have to wait and see what happens. Now, the last time we went above baseline, we had a red dot. Look at this. We had a green dot right after, and we did go on a run. So this might be, kind of what people are talking about when they're saying there could be a June rally in here. There could be a little one. That is possible, okay, because we are still above the baseline. So I think that's important. Now, looking at this, though, you can see that we had money inflows. So that's the red wave turning green back in that earlier pattern back in March. We don't have that currently right here. It looks like we just kind of had some money outflow. So we would need some more inflow into Bitcoin. And I do think, though, that that is starting to happen. I'm going to show you a couple metrics around that with coin market cap here in a second. So overall, again, in order to have that rally, I think we'd need to get into this quadrant, kind of break through a couple of these levels and sort of see what happens. Okay. Now, I want to show you a few other things in this video. So if we move over now to my Twitter feed. So this is obviously the stock to flow chart from Plan B. I had retweeted it the other day. He had just posted this. I want to say this date was May 31st that he posted this. And whether you believe in stock to flow or not isn't really the point of why I'm showing you this. I'm showing you this for some of the data. Now, just because it's historical data doesn't mean it will happen into the future, but I think we can kind of see some patterns in here. So if you're looking at these color-coded dots, this is kind of, the like it says down here, months until next halving, right? So these dots represent the months till next halving. And then basically whenever we get to the dark blue, we hit red again and things explode. So historically, every time we've hit red, things go way up, okay? They go way up, red, orange, yellow. This cycle was a little bit different, that we went way up with red. Orange kind of didn't do a whole lot. Yellow kind of stayed even, right? So that's a bit of a deviation from the last two cycles. But what I do think is important is that if you're looking at the green dots for where we correspond to the halving, if you look at the prior cycles, so the only cycle where we went up on the green dots was at the very beginning, okay? Other than that, this cycle here from 2014 to roughly, let's say 2015, almost 2016, we went down, right? So we had some light colored green, we dipped down, okay? Prior cycle, we had light colored green, we dipped down, all right? You can see it right there. This cycle, we have light colored green. What are the odds that we dip down? Well, pretty good considering we've done that in the last two cycles, okay? So I think it's highly likely that we do dip down from here because, we also have various geopolitical and macroeconomic factors that are weighing on everything right now that sort of need to be resolved. So I think that what these dots show us is that it's probably, there's a higher likelihood of us dipping down than immediately going up from here. But where I think we have some potential is if you look at this last cycle, we did have a rebound before the cycle ended, and you can see that right there. I think this cycle is more than capable of having a rebound, and I talked about that in the last video that I did on Bitcoin. So I see us dipping down a little bit, and then I see us rebounding towards the tail end of this year, I think we could have a good rebound. As I mentioned in my other videos, if we get an end to this war, if things start to turn around, we could have a good rebound that turns around towards, let's say, the last 3 months of this year up until springtime of next year. I think it would peak, and then we'll drop like a rock after that until we go into the next cycle, at which point then we hit these red dots, and that's where the real gains are made. That's when it really goes up. So we're still in a firm bear market currently, and we still have a lot of stacking to do. Now, what else is kind of interesting here in the chart, and this is one of the reasons that I think some of this data has sort of fallen a little bit, is that if you look at the overall trend line, so when it first went up, it went above the trend, then it dipped down below with these dots, right? Next cycle went way above the trend, then it dipped down below. This cycle, or previous cycle, it went above the trend again, not as high though as this one, dipped down below. This cycle, it's kind of right on there, dips down below. So next cycle, if we kind of applied that same sort of that same trend here, then maybe it goes somewhere around here. So maybe it hits 500,000 as opposed to when Plan B originally thought it could hit 1 million in the next cycle. So maybe we hit half of that, right? And that could be likely. Now, I wanted to show a couple other things here. So this came out earlier today that Gemini is about to lay off 10% of their workforce. And this sort of corresponds with other centralized exchanges I've seen that are downscaling or reducing the rewards rates that they're paying on various coins. And this has been happening across the board. And people don't really understand this for some reason. But the way it works is that when the market is down or bear, less people are investing. When less people are investing, there's less transaction fees, right? So the exchange itself is making less money. It can't pay out the same rewards rate. The rewards, as well as the staff, sort of need to be able to scale up or down depending on what the market is doing. And that's what's happening here. Now, I also want to say that in my feed lately, I have noticed that Bitcoin has been trending a lot heavier than it had before. And that is another key indication of a bear market, is that Bitcoin starts to heavily trend, all right? This was a really good post here by CZ, where he says, in bear markets, it's actually easier to spot the weak projects and founders who are money driven instead of mission driven. Avoid them like the plague. Nothing like calling it as it is. Absolutely loved that, right? And he said down here, this was great too. He says, iron is forged in fire. This is the second cycle for Binance now. Interestingly, many of the 2017 projects never return. Personally, third one now, right? And he's kind of laughing about that. So it really just goes to show you that if the creator of the project is fully invested, if they are always building just as he is, then it's going to have lasting staying power, right? So moving forward, here is obviously Bitcoin at CoinMarketCap. Couple of things I wanted to show here. First of all, I wanted to show the zoomed out chart. So this is kind of funny because if you looked at this zoomed out chart, look at how bearish we are right now. For where we're sitting at, a little over 30,000. But if you look at the chart as a whole, it is significantly up from where it started, way, way up. So, this is where they say, when in doubt, zoom out. So if you feel like the market is super bearish, just take a look at this chart and you shouldn't feel bearish at all, okay? Now, outside of that, I also wanted to show you, this is also in CoinMarketCap. So these are the HODLer wallets going up. So I think this is very interesting because basically what that shows us is that as the market becomes bear, more money goes into Bitcoin. And this is indicative of every cycle that's pretty much ever happened in the history of Bitcoin, is that when the market goes bear, all the money goes back to Bitcoin because that is very steady long-term growth, etc. And when you look at this, sure enough, all the wallets are going up, and they're going up significantly. And I kind of wanted to point this out because, I talk about this in the various Jasmy videos I do that, we're shooting for like 40,000 holders by the end of the year, right? Well, look at Bitcoin. So in Bitcoin, we've got almost 41 million holders, and look at how much it can go up in just a couple of days. 250,000. I mean, it's just crazy the amount of holders that go into Bitcoin. And with that, the current market dominance on Bitcoin is also at 46%, which is going up. So that tells you we are also in a bear market. All right. So ultimately, I want to sum up this video in a couple minutes with some final thoughts, and bring it on home with where I think this could really turn around and sort of what I'm predicting. Right. If you're enjoying today's video and want to learn more, make sure to visit our website at KIRfinance.com, your one-stop resource shop. Once you're at the site, the first thing to do is provide your email in order to be made aware of future announcements, including blog posts, products, and services. Next, check out the About Me section for a little bit about our mission and how we plan to pay it forward. We also have links to our social media, including Twitter and YouTube. Our brand new Patreon page was also just launched with the website, where users are offered various membership tiers for exclusive content and access. We even have a blog now where I plan to post daily financial articles. There's also a link to our merch shop where we've got KIR Finance product options for the whole family. Our affiliate links are posted for endorsed platforms. Just click the picture. NFTs are also available now at OpenSea.io. We have a financial education section, which includes my book on personal finance and soon-to-be course links. And lastly, if you'd simply like to leave a tip, you also have that option, and we'll mention your support in our next video. Thanks for watching, and now let's get back to the video. All right, so for some final thoughts on today's video on what we think could happen with that June rally. First of all, I do think the rally is possible. That could happen within our current trend lines. Now, if it does happen, I kind of think it's going to be short-lived. And the reason why is going back to stock to flow. I do think that historically we have had dips once we get into this certain color of green dot. Historically, we do dip down from here. I personally think that we still have a rebound left in this cycle, though. I don't think it's just straight down. I think we do have a rebound here. But what is really weighing on everything right now is macroeconomic as well as geopolitical factors kind of all around the globe. All of these things weigh on this. One of the big things that I think weighs on it the most are gas prices, right? So if you think about gas prices, especially the price of diesel fuel. And I had tweeted about this just the other night that, every single product that's in your house, it doesn't matter where you live, came off of a truck at some point in time. So that diesel fuel is extremely important to the market and our inflation numbers, right? So gas prices do matter when it comes to inflation. So if you think about the price of diesel, at least where I live, it's like near $5.50. I mean, it's way higher than it's ever been, okay? Do you honestly think that all of those trucking companies, shipping, etc., can just eat that cost? They cannot. So they have to pass that to the consumer at some point, which means that our prices go up, our inflation stays high. If inflation's high, that means people don't have money to invest. That's kind of the problem right now. We need to get these gas prices under control, therefore then get inflation under control. Therefore, people start feeling good about investing again, and they invest, and we have a huge rebound that coincides potentially with the end of the Russian invasion into Ukraine. So if all of that kind of comes together, then yes, I think we have a massive rebound through the end of this cycle. Earlier on, I thought that we would have a rebound second quarter. Well, you know why that didn't happen was because Russia invaded Ukraine. It tanked everything. It screwed up the entire planet. All of our logistics all got messed up. Right as supply chains were coming back to normal, they all got disrupted, etc. And so it's sort of been delayed. So looking at what we're working with now, I think that what will probably happen is sometime in the fall, I think we could start that rebound, and then I think it could carry us all the way into spring of next year, at which point it drops like a rock all the way until the next cycle, and then that's where those really big gains are made again. And so if you follow the various indicators, what I really think is key here is the volume, first of all. So the volume is going to tell us if things are changing, right? What this also does is if Bitcoin has a huge run, as the money eventually falls out of Bitcoin, it then goes into the alts, which creates your altcoin season. So we really haven't had that, right? So I think we've got to look at the volume first of all. We need volume going into Bitcoin. And if we see volume starting to go up over time, I think that will be a very positive development. Right now, what you can see in those metrics is that more and more HODLers are adding Bitcoin, which means that basically Bitcoin is becoming more dominant, which continues to reaffirm that we are firmly in a bear market. We are not bull by any stretch. So could we have a little bump up in June? Yes, I think we could, but from there, I think we drop a little bit further before we eventually have a rebound later this year. So what you can do in the meantime is you can continue to do a DCA approach, a dollar cost average, small buys over time. There's absolutely nothing wrong with that. You can follow the EMAs. As long as those moving averages are bear, then it's okay to DCA. If they switch to bull, turn the DCA off. It's really about that simple. So that's kind of what we're looking at here. I also think that the centralized exchanges, if you focus on them as well, are sort of a barometer of what's happening in the market. So if you see somewhere like Voyager start to raise their rates again on their rewards, you know things are turning around. If you hear about somebody who's hiring or expanding, adding staff, that could mean things are turning around. Right now, we don't really have those indicators, right? So in the meantime, just keep on stacking. The market's not going anywhere at all. It's not collapsing and going to zero. There's so much here, there's so much opportunity, and we are still so early on that, you know, it's a good time to, as they say, stack those sats, all right? So that's it for today's video. I hope you enjoyed it. If you did, make sure to hit the like button. Don't forget that I'm also on Twitter at KIR Finance, where you can find me tweeting and retweeting on a regular basis. Check me out there. And lastly, for a friendly reminder, this is Jesse with Keeping It Real Finance, channel that always has your back, tells it like it is, and I will see you on the next one. Later.